Hey everyone, welcome back to Corporate Decoder, the place where we pull back the curtain on big business. And to be honest, this latest report is a bit of a roller coaster with some eye-watering numbers. Today we are diving deep into Applied Therapeutics Incorporated's latest quarterly report for the period ending the 30th of September 2025. Now this is not just any financial report, this is a window into the challenges and decisions a company makes when it is really pushing forward. Let's get straight to the heart of it, the financials. As of late September 2025, Applied had cash and cash equivalents of about $11.9 million. Now, just a little over 9 months prior at the end of 2024, that number was a much healthier $79.4 million. That is a significant chunk of cash that has been used up, and it shows the company is spending money to move its projects along. Looking at revenue for the first 9 months of 2025, it stood at $1 million. Compare that to the same period in 2024 when it was $455,000. This increase is largely due to licensing revenue from a new deal, but it is still a very small number when you consider the expenses. And speaking of expenses, research and development costs were $27.4 million for the first 9 months of 2025. That is down from $37 million in the same period of 2024, which might sound good, but it also reflects shifts in their development programs and possibly some cutbacks. Then there are general and administrative expenses, which were $39 million for the first 9 months of 2025. This is actually an increase from $34.7 million in 2024. A big reason for this jump is legal fees and settlement costs due to some significant lawsuits we will get to later. All these numbers paint a clear picture the company is still operating at a loss. For the 9 months ending the 30th of September 2025, they reported a net loss of over $62 million. That is a lot of red ink, and it adds up as their accumulated deficit now stands at a staggering $636.4 million. It is no surprise then that their stockholders' equity is in a deficit category, meaning their liabilities technically outweigh their assets if you look at the balance sheet from a pure accounting standpoint. As of the 30th of September 2025, the total stockholders' equity was a negative $561,000. This is a precarious position, and it is why they are heavily dependent on financing to keep the lights on. This brings us to their liquidity. Management themselves acknowledge that there is substantial doubt about the company's ability to continue as a going concern within 1 year. This is a very serious statement and essentially means they might run out of money. They are actively looking for more funding through equity debt, convertible debt, and even synthetic royalty financing, and are in talks with potential partners. The urgency is clear, and their cash position of $11.9 million at the end of September 2025 is not enough to cover their future plans. This going concern note from their auditors is a massive flashing red light. It means that even the auditors have serious doubts about the company's ability to stay in business for the next 12 months without significant new funding. This is a critical point for investors to consider. Now let's talk about the regulatory hurdles. Applied Therapeutics received a complete response letter from the FDA for their drug govorestat for the treatment of classic galactosemia. This means the FDA could not approve the drug in its current form, citing issues in the clinical application, and importantly not reaching statistically significant primary endpoints. This is a huge setback, especially after submitting the application in late 2023. They also received a warning letter related to a clinical trial for this drug. These letters have serious implications, potentially impacting future clinical trials and submissions. Adding to the challenges, they are tangled in some pretty serious legal battles. First, there is a securities class action lawsuit filed in late 2024 alleging misleading statements in connection with their govorestat application. Initially, there were 2 lawsuits which have now been consolidated. The parties have reached a settlement in principle for $15 million plus the issuance of warrants. This is expected to be covered by insurance, but court approval is still needed. Then there is a shareholder derivative lawsuit filed in early 2025 against current and former officers and directors for breach of fiduciary duty, and other claims largely based on the same issues raised in the securities litigation. Negotiations are underway to reach a global settlement for both the derivative actions. These legal battles are costly and divert significant management time and resources. All these factors combined have had a predictable impact on their stock price. The report notes that the market price of their common stock is highly volatile and has fluctuated substantially and significantly declined. Investors have seen considerable ups and downs, and the report itself warns that future results can lead to substantial losses. They are also facing delisting concerns from Nasdaq due to the share price not meeting minimum requirements, though they have been granted an extension. Looking at the big picture, Applied Therapeutics is a company in a high-risk, high-reward industry. Their strategy hinges on developing novel treatments for rare diseases. The financial tables and risk factors show an operation burning through cash rapidly with significant regulatory hurdles and legal challenges. Their dependence on future financing cannot be overstated given their current financial state and the substantial doubt about their ability to continue as a going concern. The recent leadership changes, including the departure of their founder and CEO, also add a layer of uncertainty. So what is the story here? Applied Therapeutics is in a race against time and its own finances. They have promising drug candidates, but are facing immense challenges from regulatory setbacks, legal entanglements, and the constant need for capital. The management and auditors themselves are flagging serious concerns about their ability to stay afloat. While they are actively pursuing financing and partnerships, these are uncertain paths. The company's direction hinges on navigating these complex risks and ultimately getting their drugs approved and to market, which is a long and difficult road. Alright, that is our breakdown of Applied Therapeutics' latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they can overcome these hurdles? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord linked in the description below for more discussions. Thanks for watching, see you next time.